Hi, Jonathan, you've got Bay Financial Partners, looking at investment markets. A really very key week for the US markets this week. After the Fed's preferred inflation measure of PCE came in, headline was 2.6, which was in line, but the core came in slightly stronger at 2.9. Now, does that change the Fed's thinking on an interest rate cut after Fed Chair Powell's speech at Jackson Hole, which appeared to imply that the Fed was ready to cut interest rates in September? Now, obviously, a further sort of spanner in the works for that could well be the unemployment data that comes out this Friday. Now, if you remember last time round, it was 73,000 jobs only and a massive revision downwards of 258,000, which saw Trump fire the commissioner and has now installed his own person to give him that data. Now, expecting around 75,000 for this month. Again, that's below the sort of recent average, which is around 110,000. So obviously all eyes will be on that number because, Trump claimed it was politically motivated and had been engineered to make him look bad, which of course wasn't the case. Now, also as well, a further blow to Trump is the courts have come out and ruled that his tariffs, or some of his tariffs, are illegal, but they will stay in place until October the 14th. Now, this helps negate some of the sort of bizarre ruling in Congress. The Republicans slipped into a bill that for the Economic Recovery Act, which is what Trump used to enact the tariffs, the debate on that wouldn't be one day, wouldn't be 24 hours. One day will be continuous for the length of this Congress. And therefore, the 14-day debating period never elapsed. So they didn't have to vote on it. Now, I suspect Trump's administration will take this to the Supreme Court and it'll just be very interesting to see how it plays out. Now, on the back of this, US rates have sort of nudged up slightly. The 10-year is 4.28, the 2-year is 3.66, and the 30-year is just below 5% at 4.98. Now, as well, there's no sort of movement on the Ukraine-Russian war. Putin and Russia continue to bomb Ukraine on a daily basis, and also Gaza as well. There's still no end to that conflict, despite Trump sort of claiming that he would end both of them, within a day. So again, that's sort of embarrassing for him. Also as well, in China currently there's a big meeting with Putin, India and several other world leaders out there, and a big military parade as well. Earnings season's now just about finished. The majority of sort of companies did beat the street slightly, but again, it's just interesting to look at this sort of guidance. Potentially it now looks as though inflation is starting to sort of creep up as a result of these tariffs. Which is what just about everyone, apart from the people in the administration, have been saying all along. Now, oil's just below 64 bucks and change. Now, in the UK, potentially there's a bit of a debt crisis sort of brewing out there. Sort of interest costs are sort of increasing, and really the UK government's in a little bit of a tight spot out there. And given that inflation has sort of just spiked up a little bit as well in the last couple of months, that sort of limits the ability of the Bank of England to cut interest rates. Because certainly the UK economy needs it, and obviously that would help with the funding costs as well. Now in the EU, inflation just ticked up just slightly in the last month, but again, still expecting the ECB to cut interest rates at least once before the year end. But also as well, the French PM has called a vote of confidence in there to try and get his budget through, which is pretty contentious. Now, the latest minutes have come out from the Reserve Bank of Australia, and they, it points to a reasonably subdued economy and sort of growth going forward for the next sort of 6 to 9 months, which, analysts and economists have now sort of interpreted that as at least 2 cuts before March 2026. Now here in New Zealand, a similar sort of case, with the Reserve Bank meeting last time and cutting rates, but it was a split vote, 4-2, and that implies that we'll see a further rate cut at the next meeting, and then potentially one more before year end. So I expect a cut in October and then one more in November. Now, if that is the case, that will take the OCR down to 2.5 by year end. And, really, again, the economy needs it. It is sort of struggling out there. Needs a boost. A little bit of positive news came out from Amazon with AWS looking around just over 7 billion New Zealand dollars investment in sort of infrastructure and a boost. That potentially would create maybe around 1,000 jobs, which is obviously good news. Now also as well, a little bit more lights come on the resignation of Adrian Orr, but also as well the chair of the Reserve Bank resigned this week as well. So potentially it looks like there was a little bit of an issue between the Reserve Bank and Treasury in terms of funding going forward. But most importantly, it doesn't seem to have affected the credibility of the Reserve Bank and the decisions it's making. Now, certainly with the recent cuts in the OCR, that's going to help mortgage rates, and certainly with a lot of mortgages to be reset over the next sort of 6 months, that should put more disposable income into the economy, which is going to be a welcome boost. Because at present we've got a pretty mixed economy, certainly sort of dairy and horticulture doing pretty well, but the rest of the economy really is struggling, especially retail and hospitality. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.